How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about the craziness that we witnessed in the stock market. We literally saw history in the making right before our very eyes this morning. I want to break down the three major indexes, the S&P, the NASDAQ, and the Dow, and I also want to talk about what I personally did today in the stock market in terms of my individual trading, and in general, what am I looking to buy here? Am I buying any stocks? Am I selling any stocks? And I want to go over a bunch of my watch lists here to talk about what stocks and ETFs am I watching in this crazy environment to just get an idea of what I'm personally looking at. And like you all read in the title, crude oil got crushed. And I want to talk about that, go over some charts here and how I'm looking to profit and make money on a further drop in crude oil or maybe even a rally to the upside. So if you guys enjoy this video, hit that like button for me. Consider subscribing to the channel if you want to see further content like this. And also consider joining our Discord group chat and our Facebook group. Those are 100% free of charge. Link down below in the description box. And you can also get 2 free stocks valued up to $1,400 from Webull with a deposit of $100 into that account using my link down below in the description box as well. So let's talk about the craziness here in the stock market and what's kind of been going down over the past couple of hours here. So at the time that I'm recording this video, it's about 3:15 Eastern Standard Time here with about 45 minutes left in the session today. And we can see the S&P 500, ticker symbol SPX. Get ready for this, guys, is down 211 points right now, down 7.12%. And if you guys were watching the markets earlier and overnight, I believe the futures got halted as well. The futures in yesterday's video, you even saw it, were completely in the red. They were down 4 or 5%. It was very, very bad, right? And overnight, I believe they did get halted. Heading into this morning, it was a complete bloodbath in terms of the futures. And then the markets opened, and you guys can see this massive sell candle. The S&P went from 2860 down to about 2770, and that is when we hit a circuit breaker. The stocks triggered a circuit breaker, which level 1, let me give you guys a little lesson here, and I'm sure many of you already saw this, but for those of you guys that didn't, level 1 of a circuit breaker, which is a 7% decline in the S&P 500, let's say, for example, calls for a 15-minute trading halt, and that's exactly what we saw. Let's say we get a 13% decline, which is known as a level 2 circuit breaker. This calls for another 15-minute halt, and a 20% decline, which is known as a level 3 circuit breaker, which would be insane if that happened, guys. I mean, I don't even know what we would do in that situation, but all I know is it would be bad, but that would call for a full trading day of suspension, a full suspended trading day, right, pretty much. So no more trading for the rest of the day. So that's kind of what we saw this morning. And still the markets, again, they have not recovered from that 7% drop. You know, they did a little bit. If we take a look at the S&P, after that halt, they unhalted it 15 minutes later. We rallied a bit, but overall, we're actually right about where the stock market was when it unhalted right now. So about 7 hours after that, it's still pretty much break even to where it was. Now, if we're taking a look at the Dow Jones, this is where it gets uglier in terms of a point basis. Remember, we were all shocked when the Dow Jones had a $1,000 day in the red. Honestly, I wasn't shocked. I'm sure many of you guys weren't shocked, but the headlines were all like, oh, 1,000 in the red, blah, blah, blah. You know, now we're seeing a 2,000 point in the red day. It's literally down 1,900 points right now, down 7.5%. You can't make this stuff up, guys. This thing halted as well, 15 minutes, rallied a bit, but overall it's right around where it was when it got unhalted, right? And the interesting thing about these main indexes here in the U.S. market, at least, if we're going to that 3-year chart, the 3-year 1-week chart, we can see at this point we're actually at a major support level. We're right by the 180 SMA here. We're right by a level of support from back in 2018 for the Dow Jones here. So technically speaking, this could be a level that we hold. But again, technicals are not the only thing we rely on. Technicals most likely will go right out the window. Let's say if we get another scare from the CV. We obviously saw oil prices tank. I'm sure that contributed to the market dropping today, right? If we get another scare, technicals will go right out the window. But just food for thought, looking at the technicals, that's what we're seeing here. And from the bottom to the top, at least on the Dow Jones here, and it's the same, I can tell you, on the S&P as well. You can see it, 180 SMA holding on the weekly chart here for the SPX. And overall, this market from top to bottom at this point, it's almost in a bear market. It's down about 18-19%. The definition of a bear market is anything 20% plus. So if we see that on the S&P, let's say tomorrow, we're going to be in a bear market. That's if we drop another 1-2% in tomorrow's session. The Dow Jones, going back to it, down about, again, 7% right now, and from top to bottom, it's about a 19% drop, so almost there in the bear market territory. And the NASDAQ at this point, this one on the 3-year chart, we're not as close to that 180 SMA, actually, to be honest. We're more towards that 50 SMA, which is kind of worrisome, in my opinion, especially if we start to go back down to, let's say, 7,600. If we break that support even, we may see a bloodbath in the NASDAQ and the markets in general. And I personally think if the economy, well, at this point, when the economy gets impacted further, because it's already getting impacted by this whole outbreak, as businesses start reporting their Q1 earnings, who knows, we may go down to 7,600 NASDAQ, 7,500 NASDAQ, and maybe even lower, right? And overall today, the NASDAQ is actually not down as much as the Dow S&P, right? It's down just under 6% and down 5.78% as of right now. But still, if we're taking a look at the overall point basis, a near 500-point drop in the NASDAQ in one day, that is pretty huge. So today, guys, I'm surprised the Fed didn't come in, but they do have a Fed. The Fed, that is, does have a meeting here in about a week from now, and I would expect some sort of rate cut. I know we talked about a 50 basis point rate cut, and I thought, again, maybe we get an emergency one today, but for sure, in this next meeting, I'm thinking 50 basis point rate cut. And you're hearing that everywhere, the news, everyone's pretty much saying that and expecting it. And is that priced into the stock market right now? I'm not too sure, but we'll see when and if that news does end up coming out. So let's talk about, and before we do, actually, let me know in the comments, what are your thoughts on the markets in general? Are we going up from here, down from here? Overall, I personally think, again, it's going to be rocky. It's best to have some cash here, and if you're a long-term investor, maybe start buying into something, right? Maybe start putting some of that cash into work. But for me, again, it's all about being slow, not rushing, putting everything to work at once. But if you're a long-term player, maybe nibble a little bit, but stay cash heavy just in case we do end up dropping. That's kind of what I'm thinking here in under 20 seconds, right? So again, let me know in the comments your thoughts. Now let's talk about what I personally did today. And the truth is, guys, I didn't do a single thing in today's session. Not one thing. And this is interesting because you would think maybe I'm shorting something, maybe I'm playing TVIX, but the truth is, the market today, I just felt, for me at least, it was better to just play cash. And like I always say, cash is a position. There's no need to always force into a trade, into something just to put your money into work, right? Because let's say I were to buy a stock today, I would most likely be down. So cash, in a way, making 0% is better than losing money at the end of the day, right? And the truth is, I was not in anything from Friday or anything really, in terms of a short-term TVIX play like that. Not that I ever do that anyway. So for me, I kind of missed the move. And we talked about the S&P halting here. So we dumped aggressively, didn't want to get into anything here, knowing that we were about to halt, knowing about the 7% rule from earlier in the day, right? And obviously from other experiences as well, I've, studied and known about this. So I didn't want to hop into anything because, again, we saw that massive sell candle. So after that, we saw the pop. Sure, I could have played something here on this drop from, let's say, midday to the downside, but again, or rather to where we are now. But again, I just didn't want to do anything. And at this point, I'm just going to reevaluate what the markets are looking like heading into the close today. And of course, the futures heading into tomorrow. And I'm going to see what, if any, opportunities present themselves for me to end up hopping into those. When it comes to, let's say, longer term stocks, and this is going to get into the next segment of this video, talking about kind of some stocks and ETFs I'm watching here. A couple that come to my mind and that I've been talking about here on this channel are Disney. Disney's down 8% right now, down $10 per share, down to about $105. And honestly, I have a couple $100 going into my M1 Finance portfolio here over the next couple of days to just average in, since that's more of a long-term portfolio for me. I'm looking to pick up some Disney. I'll be completely honest with you guys. I'm looking to buy some Disney here, as I just love the company going long-term here over the next 10, 15, 20 years. Another one that got slammed today is Boeing, ticker symbol BA, down $32 per share, down 12.23%. And this is trading, guys, at $223, or it was. Now it's currently at $230 per share. And these are not prices, or these are prices that we haven't been at since 2017, which is pretty insane to me. And, this being one of those companies that has a pretty strong moat at the end of the day. It has a very, very strong moat. You can't just come in and become the next Boeing. This is a massive company that I think is here to stay. I'm not going to go deep into it because the video will be too long. Do your research on Boeing, but anything 200, low 200s, even in the high 180s, 190s, whatever, that's a buy for me. So I'm looking to buy Disney. I'm looking to buy Boeing. Those are the two main ones in terms of individual stocks at this point that I'm focusing on. Another one that I'm in is Microsoft. This is one that I've been buying in my M1 account, and I've been buying shares on this dip for a longer term swing position. This is one that is holding decently today. It's down about 4.8%, which is not good, but if you're comparing it to the market being down about 7%, 8%, Microsoft's holding pretty decent compared to the market there, and that makes me comfortable, as I do have at this point an average share price at around $168, $169, right around there. So Microsoft, did I buy more today? Nope. Will I buy more in the future? We'll see. In terms of my swing position and my long-term position, I will for sure be buying down into the whatever level we do get to. And of course, I will update you all in these videos. MasterCard, ticker symbol MA. This is another one that I'm down on in terms of my swing position. I bought a little bit at $293. This one's down about $19 per share right now, down almost 7%. Still, it's worth watching, guys. In my opinion, MasterCard, Visa, these companies, like Boeing, they both have pretty strong economic moats, and in my opinion, they're not going anywhere. Payment processing is not going anywhere. So MasterCard looking to accumulate some shares here, but not too heavy, again, because having that cash on the sidelines is a hedge, because I'm fully aware, as I'm sure you are, that this market could for sure go down even further with everything going on, again, with the CV, oil crashing. This is just a crazy time to be alive in terms of the stock market. So let's go over some other stocks right now that are getting crushed. Financials, airlines, cruise lines. Let's talk about some of those very quickly. So airline stock, let's go over those very quickly. AAL, American Airlines, just when you thought it wasn't going to get worse, they're down 89 cents today, down 5.57%. DAL, Delta, which arguably is the best airline, that's what many people think, and I personally agree. As I looked into their balance sheet, it's better looking than a lot of these other airlines. Delta holding up decently today, but still it's down $2.10, down 4.55%. Southwest LUV is down 3.39%, down $1.55 today. And another airline, probably the most risky. I don't know if it's the most risky, but it's the cheapest in terms of actually flying. Spirit, ticker symbol SAVE. This one's down 83 cents, down 3.77%. Now, let's shift over to financials, which, let's just put it this way, ever since the Fed cut rates 50 BPS a couple days ago, banking stocks have been in free fall. And if they cut the rates again in a couple days in their next meeting, I think there's going to be more downside in banks. BAC, Bank of America today, down 14.4%, guys. This is crazy. Down $3.71. We're now at values that we actually haven't been at since 2017. We're actually below where the share price of BAC was in 2017 here, which again is utterly insane. JP Morgan, which is arguably the best bank stock out there, down 12% today, down $13.51. This is now at levels that we haven't been at since right before 2019 and back in 2017. Pretty crazy. WFC, Wells Fargo here, down 11%, down $4.31 here. Let's go over to some of these cruise stocks that people have been buying, and I've said on this channel since CCL was $40, be careful, be careful. It is down another 20%, down $5.44. It is now trading in the low 20s. And when I talked about it last, I think it was 2-3 videos ago, I said back in when it was $28, low 20s could be an opportunity maybe to pick up some shares. But at this point, guys, I think it could go even lower, because personally, I wasn't expecting 2 straight days of 20+% drops for this stock, which is just utterly crazy. Because if you guys remember, massive drop number 1 was a couple days ago. We consolidated a bit the day after, but now we saw it today, another 20% drop. So for me, since it's dropping so quickly to the downside, I'm not going to try and buy any quite yet. But hey, there is some decent value emerging slowly, and especially in the $15 to $20 level for CCL. I think there is some decent value there if we're taking a look at 5 years out. But again, always invest at your own risk and understand this is a cyclical business, as are the airline stocks as well, right? RCL, let's take a look at how that one ended up doing today. Royal Caribbean, oh my goodness, this one's down even more, 25% today in one single day, down $16 per share. This is an absolute bloodbath. And another bloodbath, which we alluded to earlier, is crude oil. Crude oil, guys, down $10.22 right now, down 25%. And this plunge, and I'm looking at my notes here, this plunge started after Russia rejected a proposal by OPEC to cut its crude oil production by 1.5 million barrels a day. In apparent retaliation, Saudi Arabia cut prices for buyers over the weekend. That came after the CV concerns had already started to drag down demand for oil and transportation. Like we saw, airline stocks getting crushed. They use oil. And obviously, flights are getting canceled, so they're not using as much oil. Same exact thing for the what's it called, guys? The cruise lines, right? And under basic economics here, basic economics, high supply and lower demand tends to drive prices lower. Kind of like, on a side tangent here, what we've been seeing in natural gas this year. We've had a very high production of natural gas. It's not hot. It hasn't been hot really in terms of winter, mild winter, so low heating demand, which is why we're seeing that low price in natural gas. It's basic supply and demand, guys. And this drop in crude oil, this is the biggest drop we've seen since the Gulf War back in 1991. So how can we trade and profit off of crude oil here, dropping or going back up? Well, my favorite combo, inverse ETF combo to trade, is Drip and Gush. And Drip and Gush, they trade based upon XOP, which is an oil and gas-based ETF. And pretty much how this works, very simple, is when XOP is going up in price, Drip is going down. So what you would like to trade if we potentially fill the gap would be Gush. You know, Gush goes up whenever XOP is going up at a 3x rate. So since we saw this massive drop in crude oil, obviously XOP followed since it's an ETF, an oil and gas ETF. You know, we saw this drop. Drip exploded today. If you were to buy Drip on Friday, you would have made, get this, guys, 76% on your money. This one's up $210 in a single day. So this is one way to trade it. In terms of crude oil at this point, I'm not too sure. It seems like we tried filling the gap from 27 to 34. We tried. We didn't get all the way to 41, which is the point where we gapped down from. And it looks like we're continuing the downtrend at this point. We're falling below moving averages here on the 5-day, 5-minute. So Drip could be a play, maybe heading into tomorrow's session. So Drip and Gush, those are both two that I'm watching here that trade based off of XOP again, and you can really capitalize on the volatility in crude oil by trading those. So let's go through a bunch of other stocks very quickly here. Caterpillar down to $105 per share today. It was down 12%, so industrials got slammed. You guys already saw Boeing, BA. Again, this is down 13% on the day. We're getting to levels now that we haven't been at since 2017. That's what you're noticing with a lot of these stocks, it seems like. We haven't been at these levels for 3 years almost at this point, which is pretty interesting. Tesla down 13% today, getting closer and closer to that $500 level, down to $611 per share. Shopify down $52, down 11.09%. Uber, which we talked about yesterday, most likely was going to have a tough day, as a lot of these stocks are clearly. This one's down 10.35%, $3.27. Google down 5.3%, which honestly, Google is looking nice here in terms of a dip buy, but I don't want to rush any capital quite yet, but still, I'm looking at it, right? Amazon down $87 today, down to $18.13, down 4.56%. Let's take a look at gold very quickly. Actually, no, let's wrap up tech by looking at Apple and Facebook. We almost forgot Apple and Facebook, guys. Apple's down 6% today, down to $270 per share, and Facebook down $10 per share, down to $170 per share. So Tech slammed, although the NASDAQ is doing better than the Dow and the S&P, which is funny. But either way, this market is just getting clobbered. These individual stocks are getting slammed. And gold, a lot of people are talking about gold and gold mining stocks in particular. That's not an area, I'll be honest. I'm not one of these people that tries to say that they know everything about everything. I don't know everything about everything. Gold stocks and gold mining stocks, I'm not too familiar with those, but I've been seeing a lot of people talking about them. So honestly, I need to do my homework. But I know a couple ways to play gold, and that is by playing JNUG. You can play JNUG, although JNUG's down 21% today. You can see GDX probably tanked. Yup, GDX is down. This is a gold miners ETF, right? But again, I don't know in depth about individual stocks here in the gold mining space, but GDX, JNUG, GLD is one that I personally own. It's an ETF, and you guys can see the purpose of GLD, having a gold ETF. It's to store value. It's to hedge against the market. It's to hedge against the market going down, the economy, the US dollar. This is down 0.08%, while the market is down 7%. So having 3-4% of my portfolio, which is literally what I have allocated to GLD, I'm a firm believer of that. It helps me. It helps me out, and it helps kind of balance that portfolio in rocky times. So overall, guys, that is it for this video. I hope you all enjoyed it, found some value in it. If you did, feel free to go down below, hit that like button, consider subscribing, and let me know in the comments, what are your thoughts on the market? Are you buying, selling? Are you looking at playing puts, calls, anything? Let me know down below any thoughts that you're having. I would love to talk to you guys. And don't forget to join our Discord group chat and our Facebook group and snatch up those 2 free stocks, which one is valued up to $1,400. Those are linked down below in the description box. All you have to do is put in $100 into Webull, and you get those 2 stocks valued up to $1,400. I'll catch you all in the next video. Thanks for watching. As always, the support means a lot to me, guys, more than you know. Peace out.